冰城甜蜜蜜，你爱我，我爱你，蜜雪冰城甜蜜蜜。
Imagine a fast food chain larger than McDonald's and Starbucks, yet still relatively unknown in many parts of the world. Enter Mixue Ice Cream and Tea, a brand that has quietly become the world's largest fast food chain by store count. Today, we explore the 5 key strategies that has propelled Mixue to global dominance. With over 45,000 outlets worldwide, Mixue's meteoric rise is no accident. But what exactly is Mixue? Founded in 1997 in Zhengzhou, China, Mixue Ice Cream and Tea started as a small, shaved ice stall by Zhang Hongchao, a university student trying to earn extra money. In the early days, Mixue focused on just one product, shaved ice with fruit syrup, but Zhang had bigger ambitions. By the early 2000s, he expanded into soft-serve ice cream and milk tea, 2 booming categories in China's food industry. By keeping prices low and flavor simple, Mixue slowly built a loyal customer base. Fast forward to today, and Mixue has grown into a global beverage empire, surpassing McDonald's and Starbucks in store count. But how did a brand built on cheap ice cream become one of the most successful franchises in the world? So here are the 5 key strategies that have propelled Mixue to success. The first is their affordable pricing strategy. In an era where specialty drinks can cost $5 or more, Mixue built its empire on ultra-low pricing strategy. And when I mean low, it is low. Costs as little as 65 cents, a fraction of the price compared to competitors like Starbucks or the Alley, where the drinks can easily exceed $4 to $6. This affordability is one of the biggest factors behind its explosive growth. And for context, 65 cents is pence, but it's about 70 cents US. So the drinks are very affordable, and this affordability is one of the biggest factors behind this explosive growth, especially during a time in China's economy when there's a housing crisis and slowing in the economic growth. So you might be wondering how Mixue keeps its prices so low. Well, the first is vertical integration, which means it owns and controls its supply chain. If you were to think like McDonald's and their supply chain, they source beef, vegetables, meat, cheese, but they don't own their farms, they don't own all of the production facilities. Mixue does, from the raw material sourcing to manufacturing and distribution. Instead of relying on third-party suppliers, Mixue produces its own tea leaves, dairy products, and packaging. This means that it's able to cut costs dramatically because rather than buy from a third-party supplier and they mark up the price, you get to produce and get all the ingredients at cost. The second is simple ingredients and scalable recipes. Unlike premium bubble tea brands that use exotic toppings or fresh fruit, Mixue sticks to low-cost, mass-produced ingredients. The result? Low production costs, faster preparation, and high margins on its products. And third, because of its massive volume and number of stores, Mixue has obtained economies of scale. Mixue can negotiate rock-bottom prices for its ingredients, much like McDonald's, because the size of the operations means that they get to buy things like cups at a very low price, which drives costs even lower. This helps them maintain ultra-affordable pricing while still turning a profit. The end result? Mixue's budget-friendly prices allow students, office workers, families, and even lower-income consumers to enjoy bubble tea and ice cream on a regular basis, a luxury turned into an everyday treat. Second, they have an aggressive franchising model. Mixue isn't just a brand, it's an army of franchisees. Unlike global chains like Starbucks or McDonald's that have high franchise costs, Mixue's franchising model is shockingly cheap. The total investment to open a Mixue store can be as low as $30,000 to $50,000, a fraction of what it costs to start a McDonald's, like $1 million USD, or even a bubble tea franchise like Gongcha, which is about $200,000. Here's why Mixue's franchising works so well. There's minimal investment. Lower startup costs mean more entrepreneurs can open a Mixue shop, especially in developing countries. the equipment required is minimal at best. You don't need fancy fryers, ovens, or even any flat top grills. Second is its pre-packaged success. Mixue provides a turnkey business model with training, standardized equipment, and direct ingredient sourcing, reducing the risk for franchisees and basically meaning that all of the necessary details and operational guides are provided by Mixue. So it's a very standardized and simple process. So that means that every Mixue franchise will make the same product and will make it with the same quality, and this allows Mixue to ensure consistency amongst its franchisees. Because stores are so cheap to open, Mixue has expanded at an unprecedented rate, surpassing 45,000 locations globally, and they haven't even opened in North America either. By lowering the barrier to entry, Mixue has enabled thousands of small business owners to start a profitable venture, while the company itself enjoys rapid market saturation. Third, Mixue focuses on strategic market positioning. Mixue approaches competition in a unique way. Instead of competing head-to-head with premium brands in major cities, Mixue targets overlooked markets. While Starbucks and bubble tea chains fight neck and neck for spaces in big cities like Beijing, Shanghai, Mixue focuses on lower-tier cities, emerging markets, and smaller international markets like Australia. Here's why. First, you have lower competition and lower rent, especially in lower-tier cities. This allows them to assert market dominance and really capture consumers and really establish itself as a top brand. They also focus in emerging markets where disposable income is rising, especially in countries like Malaysia and Indonesia. And in smaller international markets like Australia, there is a strong demand for budget-friendly drinks, especially with great weather. So Mixue can position itself as a dominant brand, offering affordable drinks and treats at a low price, which captures significant market share. This strategy allows Mixue to dominate regions where other brands hesitate to enter, and with a low-cost, high-volume approach, it secures market leadership without expensive marketing battles. Another reason for Mixue's success is its strong brand identity and marketing. Branding is a key success to Mixue's success. The Snow King mascot is a lovable, cartoonish ice cream mascot that instantly makes the brand recognizable. And they also have the catchy jingles. With these unique songs help Mixue stay in people's minds. And they are also dominant on social media. A commonality in all the videos I make is that successful companies really know how to leverage social media. Memes, TikToks, and influencer partnerships fuel Mixue's popularity online. By creating a fun, lighthearted, and meme-friendly brand, Mixue attracts younger consumers who drive word-of-mouth marketing. And finally, Mixue had a successful IPO, which allows it to fund further expansion into the Americas and Europe. This was recent current news because Mixue Ice Cream and Tea successfully went public on the Hong Kong Stock Exchange in early March 2025, raising approximately $444 million. On its first trading day, Mixue's shares were offered at 202 Hong Kong dollars. The stock opened at 262, marking an almost 30% increase from the issue price, reaching almost as high as 300 Hong Kong dollars. The IPO attracted substantial interest from investors, with the retail proportion oversubscribed by a remarkable 5,258 times, and this reflects Mixue's strong market presence and investor confidence. The successful IPO underscores Mixue's rapid growth and its position as a significant player in the global fast food and beverage industry. Based on my research, it's no surprise that Mixue's rise is no accident. Its success is built on 5 key strategies: affordable pricing, low-cost franchising, strategic expansion into untapped markets, a strong brand with viral marketing and a catchy tune and slogan, and successful IPO, which will further future growth in Europe and Americas. So basically, I see Mixue as a growing brand and they've really allowed themselves with their pricing to reach many different types of target markets, which is great for expansion and really capturing market share and dominance. So I see Mixue even reaching up to 50,000 stores based on its pricing, its economies of scale, and overall brand. What do you think? Could Mixue become a global household name? Let me know in the comments, and thank you for watching this video from Biz1. Subscribe for more business breakdowns and analysis. See you in the next video.